Hello viewers, welcome to my channel, Sensor 360 Investor. Let's take a look at the trading segment in this video with an R360-degree framework. And we're going to look at trading breakouts. And this may possibly be one of the better breakout setups that's out there. Before we begin, a quick word about the disclaimer. This channel is not providing financial advice. Please pause, read through this before continuing. Okay, welcome back. So without much further ado, let's begin the show. And we are going to look at breakouts. So typically, there are three common patterns. So on breakouts, you're looking for an issue that's actually displaying strength and momentum. And you can gauge the momentum by the uptrend. And so usually what happens is stock will move up and the uptrend in all examples kind of similar. So this is the prior uptrend. Then the stock will form some kind of consolidation or base, and there are different patterns, etc. So we don't need to make this more complex, but you could have a kind of a pattern which is like a U shape, a pattern that's like a W shape, and then you can just have a pattern in an arrow range. But in all three cases, what typically happens is after the pattern is complete, the stock will reemerge out of well, that pattern's called like a base, will reemerge out of the base with renewed vigor and strength. So this area here and this area here and this area here is usually a place where sellers and buyers exchange stocks, and stocks move from one holder to another holder. And what's really happening is that the people that bought earlier rode this uptrend are now ready to offload their merchandise, and people that missed it or looking to gain a position in it are looking to get in. So this is kind of an exchange zone. So that's typical breakouts, and they don't always go like this because there's a propensity that many of these breakouts do fail, and the algorithms are well aware of this technique. So that's the downside to trading well-established breakout patterns. In a meeting that was held at the beginning of May, there was the attendees posted several stocks. One of the stocks that they posted for review was Shopify. And so when we looked at Shopify, obviously in a clear downtrend, it's come off. But what you notice is there's a inverse head and shoulders pattern here, which is bottoming base. So once you spot this, and then you can see how it comes out of that, moves up above the neckline, and then immediately forms a base, right? And in that, then it shoots out of this base. This is an earnings related move, and now it's just digesting that huge run up. So this is on a weekly chart, and if we look at the daily, so here's the base that we were looking at earlier, and you can see how the stock is just kind of done nicely, trying to get back to the top of the base, and then on earnings it shoots up, right? So, but before earnings, this zone here, you can see how the stock quietens down, and the volume really dries up. So there's no sell-off going on, there's no heavy buying. But if you know the structure of the base and where to get in, and if you are positive on the expected outcome from earnings, what you can do is you can put a buy stop order in at some point above this level. You could put it excuse me, in at standard pivot would be kind of higher the structure, and that would get you in on the earnings support, and you could have participated in this little up move here. So once we spotted this, then we analyzed the rest of the stocks that the people had on the list to see what was reporting in the following week. Lo and behold, CELH was. So we looked at that and set the same parameters, put a buy stop order in at this level around 120. If the stock beat, and you could have actually gotten in fairly early and participate to some extent to the upside. Again, this one's a slightly different pattern, but again, you got a big basing pattern here, got a lot digestion of the uptrend here, which is kind of also base next to this base, but low volatility. And then you've got similar volatility. You kind of get a double bottom here, bottom here. So bottoming at support, so that gives you real confidence. And then this zone quietens down, volume goes away, tightens up, and got a little accumulation, some momentum coming into the issue. So again, you could have even taken a buy stop somewhere within the base and profited from this stock. So earnings and breakouts, if you play them together, actually get you in ahead of traditional breakouts and are much more powerful in many respects, because it's usually an adjustment to the institutions, because they now have to reposition their overall position in a stock, and typically as they re-rate the stock, they have to buy more. So that gives you the catalyst to for a momentum move. And usually after a big move, they will quieten down a bit. Which, so if you miss this, there's a second opportunity, which I'll cover in a separate video another time. And here we get, and here's CLH on the daily. So you can see it was building quite nicely up. A lot of strength started to come in, volume picked up. So definitely a strong set accumulation build up before the earnings report took place. Okay, so that's it for trading breakouts. Hopefully you get something out of this. Take a look at those two stocks and other ones that fit a similar pattern, and hopefully this is a profitable setup for you. That's it for this video. So I will thank you for watching. Thank you for listening. If you're not a subscriber, please subscribe. If you like this video, click like, share with your family, friends. I will see you in the next video. Goodbye.